Interest rates just jumped to the highest level we've not seen since, what is it, like 2007, 2008. Just been crazy for interest rates. And what exactly does that mean for home prices or the housing market in general looking into the future? Well, I really can't tell the future just due to all the uncertainty, but we're going to line up some dots and try to come to a solid conclusion of what we could potentially see looking into the future. As always, thanks for tuning in. My name is Joshua, local realtor here in the Sacramento and Roseville areas. And if you have any real estate questions or anything about any of the videos that I have done in the past about some specific data points, please reach out to me, leave me a comment, let me know below. Be happy to go over deeper or even make another video about any questions that you may have. So let's actually jump right into the housing, or this is the interest rates, excuse me. This is a 30-year fix, and we are just on a tear as far as interest rates jumping up here. And you can see that the Mortgage News Daily has it at 6.23%, and this is the Mortgage News Daily website. Go and check them out. You can see here the interest rates are just skyrocketing to the uptrend. And if we go on, so obviously these interest rates, I mean, you just saw on that chart, have just been on a massive tear. So everything's just been happening so quickly. We really don't have time to digest this. I mean, it usually takes a couple months because in a closing, most closings don't happen in 7 days. I just had one that happened in right around 8 days. But most closings in single family housing happens in 24 to 30 day window period of time, right? So it really does take another 30 days from the interest rate spike to see exactly the data that's going on. So we're basically a month behind. And with this huge jump, it's going to take another month to actually see what effect this 6% interest rate level is actually going to have in the marketplace. So as we jump over here, we'll go quickly through the market data for all of Sacramento County, and this is from Redfin. And you can see here that the black line is the 2022 data trend, and then we got the orange here, which is the 2021, and then this blue is 2019, and then down here in red is the 2020. So we're slightly below. I mean, I would say we're on par with our 2021 data points with new listings. Saw a kind of big jump back in April going into March, but kind of on the downtrend on the new listings in all of Sacramento metro area. And then here's pending sales. You can see we're kind of taking a big dive going from the beginning of, what is that, May to right around the beginning of June. So it's been on a pretty steep decline since that time. Far below our 2019, far below our 2021. And if we go into homes sold, you can see the homes aren't selling as much as we saw in 2019 and 2021. So we got quite a bit of ways to go. But the good thing about this is it's on a flat trajectory. It's not going up or down like we saw on the pending sales. And if we go over to the median sales price for Sacramento, you can see our prices haven't came down too much. We're still kind of flat, which is good for a seller. Home buyer, you know, I mean, it really depends on your situation. But I mean, obviously, we would like to see home prices at least come down a little bit. But home prices are still elevated quite well with all the recent rate hikes that we have seen. And if we go over here into some more specific data, I got Granite Bay, Lincoln, Rockland, Roseville, and Sacramento County. Sacramento County is a big county, so there's a lot of cities in there. And the data that we get for Roseville, Rockland, Lincoln, and Granite Bay are going to seem minuscule to Sacramento County because it is. And yeah, I mean, there's nothing more to say. It's just a lot smaller cities than Sacramento County. So if we go over here, Granite Bay, you can see, and if you're familiar with this area, Granite Bay is a nice region. They have a lot of land attached to the housing, and the housing is typically in the 3,200 square feet and bigger. The average price point's coming in at 1.4, which is, I think, is a little bit above the actual prices out there, what I've been seeing, but it's kind of close to that. And then we go over here to Rockland's coming in at 735, And then we got in Lincoln 695. It's actually kind of surprising it's that high. And then we got Roseville 650, and then Sacramento County's coming in at 552 for the house prices. If we go to homes close to the levels that we saw last year. Now, of course, we would like to see home sales continue to go on the uptrend, and it is on the uptrend. But we would like to see this jump, especially in June, as we don't have June's data just quite yet. But we would really like to see this big jump into the June data points. And if we go to the new listings, you can see the new listings are starting to come onto the marketplace. We're still not as quite as where we were in the same time of 2021, but we're getting there. It's not that far off. We go over to inventory. You can see inventory is on the rise, so that's why we are starting to get there. We had a big jump in inventory going from March of 2022 to going into April, and I'm sure that the May and June data is going to be even higher. I think we're going to be at the levels that we saw back here already into leading into September, October, and July's data points. And then if we go over here, this is the Redfin monthly rental market data. And if we this is at 20%, but if we go down to, if we go to 5%, I just want to show you guys this real quick. So 5%, so the average rental price for all residential properties, now this is an average, is $2,740 per month. Now for the 5% down, a mortgage on the standard house in Sacramento, which we have, what was the standard home price, or the median home price, which is $552. So the mortgage comes out to right around $3,076 with 5% down. So obviously the cost to own is a lot higher than the cost to rent, but again, you could leverage out more with a property that you own compared to a property that you rent. But if we jump this up just to 10%, let's go over to 10%, you can see that we actually are only at $200 less from the rental price to the mortgage price. Now it's starting to get a little bit more enticing. If we go over to 15%, 15% is the exact same as renting a property here in the Sacramento area. And if we jump this to 20%, I'm sure you guys will know that it actually comes down. It's actually cheaper to own than it is to rent a house with 20% down. So obviously with that 20% down, you get better options as far as cheaper price. But on top of that, you get to leverage out that property, meaning what I'm talking about here is either building an ADU on that property, 2 ADUs. You could do ADU, a junior ADU, and even a garage conversion. So you can actually have 3 units on your property that you purchase, or you can just rent out the rooms. If you're young and single, or if you're just single, you can rent out all your rooms. And renting out a room is actually just like the rental market. It's very, very good. So you actually could leverage that, and you could turn in your mortgage basically into a very minimal amount that you pay. Everybody else is paying that for you. So obviously owning, you can do that a lot better than renting. So if we go on to the last couple pieces of data, I just wanted to show you guys real quick. This here in blue is the 30-year fixed rate mortgage, and here in red is the median sales price. And you can see that whenever interest rates rise, home prices tend to fall down. When interest rates come down, home prices have a little jump up. They're not perfectly correlated, but you can see that when we have big moves in interest rates, it usually tends to have big moves in the housing prices, as you can see here in this chart. So interest rates after the housing crisis, interest rates were low, and on a year-over-year change, and then home prices were kind of stagnated, and then we had another drop to really have that boost, and then home prices went on uptrend, and then interest rates jumped up as interest rates are in blue, and then home prices kind of came back down. So if you just move that over to today, you can see this massive change in interest rates, and home prices are beginning to come down. And if this continues to go up, well, I'm sure you can imagine what will happen to home prices into the future. And then if we go over here, this is the median sales price for the average home in the U.S. And I have overlaid the Wilshire 5000, which is the S&P 500. And you can see when the stock market goes up, home prices tend to go up with it. Now, this isn't perfectly correlated as well, but whenever, I mean, they tend to follow each other for the most part. I mean, you can see here that they're, when stocks are up, home prices tend to go up. When stocks come down, home prices tend to come down with it. They're not perfectly correlated, but they do tend to follow each other in general, right? As you can see here, and you can see now stocks have come down quite substantially, and this is a percent change from a year ago. So they've changed on a year-over-year basis quite substantially, as well as home prices are beginning to come down as well. And one more thing I wanted to leave with you guys or show you guys is the consumer loan credit card and other revolving plans from all commercial banks. And it's not too often that we see these big jumps. You got one here, which we're currently at in consumer debt, credit cards and mortgages and just car payments, everything, consumer debt, right? And we had a huge one up here and right after the housing crisis. We had one during the recession and another one here in 2004. Now, this doesn't happen too much. You can see typically it is flat. This is as far as the data goes, but we just don't really see the high credit usage environments from the consumers unless something is really setting up for some kind of events in the future, or at least after the event, like what we saw there. So in a nutshell, there you have it. That is the market data. So again, like I said, we're seeing the signs of the housing market begin to slow. It's taking them more days on market for these homes to sell. So they're no longer selling within a weekend. So that is long gone. Unless it's great price, there's still demand out there, but the market is obviously beginning to change. And now with these interest rates, we're gonna just really have to see the next month's data come out to really judge if this 6% interest rates just have buyers completely out of the marketplace. Now, leave me a comment below if you. See you guys soon.